you could trade Bitcoin yen, hedge in Bitcoin dollar, and then buy dollar yen all through Hidden Road. And these are what the large, sophisticated institutions are doing. So the business is pretty mature, but the industry itself, it's still early on. In the baseball analogy, I don't know, we're probably top of the second inning.
But this is a whole new world. So now you were like, I need to go get people that actually understand.
I think we were Googling what airdrops were.
Yeah, okay.
The problem with crypto and the banks is under Basel III, it's 100% RWA haircut, and therefore it crushes any economic incentive for a bank to enter.
Where are you guys headed now? What's the future looking like? What are you focused on these days? Tell me, what are your next big goals?
And so we've been focused on building out an OTC business in linear products. I have a panel of all the major market makers.
Okay.
I would also say, watch that space because the TradFi market makers are now very active in crypto.
Welcome to another episode of Derivatives Decoded. Today, I am incredibly excited to have a conversation with Mike Higgins. You know, there's so much that we could talk about, so much that I could say about this guy, but I'll let him introduce himself. Mike, thank you for joining us today.
Thanks for having us, Ash. Appreciate it.
So I'd like to start off with, who is Mike? How did he get here? Walk me through your career, and then there's so much that we're going to discuss today.
Yeah, sure. So Mike Higgins, I'm the international CEO of Hidden Road Partners, based in London. Prior to that, I spent 20 plus years in electronic trading, multi-asset background, a bulk of my time in the foreign exchange market. So originally from New York, went to school here, went down to Wall Street. 2009, we were listing a company on New York Stock Exchange, and one way to guarantee another quarter of growth was an acquisition. Got sent across the pond to buy an options business, right up your world in the options space. And that was, 15 plus years ago. So I think my return ticket's now expired. But that's me. Hidden Road, we set up that business just shy of 7 years ago. It's a multi-asset prime and clearing firm that was set up and funded by the buy side. So it's a sell side business, but really with buy side capital and a buy side kind of mentality. Mm-hmm. There needed to be innovation in that space. And so we built out that business. More recently, we swapped out some of the pension fund capital that funded that with an acquisition of Ripple, which I'm sure we'll talk about.
Absolutely.
And really what a PB is really access providers, right? It's access to two main things. First is access for institutions to trade across the whole ecosystem, right? If you're a hedge fund or a broker dealer, you have a fiduciary responsibility to source best price for your clients, right? And so you need to scan the markets in real time. And there's a lot to that, right? There's credit, there's technology. And we're really on the credit side. So access to that whole piece. And then the second is, and we'll get into this a little bit, is access to balance sheet, right? Because in the crypto space in particular, all of these venues are largely pre-funded,
yes,
right? And so you need to put balance sheet up. And so that's effectively what we've done. We're not just a crypto story. We started in traditional markets, in foreign exchange, expanded to listed derivatives, newest clearing member on the CME, fixed income, digital assets. So that's my background, really from the trading side, a user of Prime, but having had that experience going onto the PB side has been helpful to build for what institutions need.
Beautiful. There's I have too many questions, but I'm going to start with a bunch of easy ones, and I'd love to simplify things a little bit for some of our viewers that might not be very familiar with the sophisticated requirements behind a PB of that scale. So naturally, obviously, like in TradFi, right? The problems that a PB kind of like solves for are relatively sort of given, right? The playbook has been around for quite some time. There's clear regulatory requirements. There's a clear framework of what a PB actually does and where it falls within the stack of institutional participants. In digital assets, though, in crypto, right? Especially when you guys started off, it wasn't exactly clear what even a prime broker in that space should look like. How should it operate? And what are the problems that it should tackle first? Because there's like a billion of those, right? So I want to start off with first day when you guys started that business, right? When you started thinking, all right, we're going to offer a very robust PB operation for the crypto space. And here's what it should look like. How did you come up with that idea? How did you come up with that business model? And then two, that feeds into that. Once you figured that out, how did you get all these TradFi LPs to convince them to actually touch a space that was clearly at the time, a lot of people were like,
a lot of time and effort, and I had a longer hairline in the front at the time. But yeah, sure. Happy to kind of take you through that journey, if you will.
Yes.
But I guess kind of take a step back, right? What a PB does is, again, really that access provider. And so when you look at the digital or crypto market kind of infrastructure today, there's a lot of similarities, right? There's lots of different end destinations where you can trade. So fragmentation.
Yes.
And when fragmentation is a theme in a market, PBs tend to do well, as the large trading firms, as they thrive off fragmentation and global pricing. So that's kind of step one into this. Number two was the problem with the crypto market is that it was started by retail, and institutions are starting to come in. So you had this pretty retail designed infrastructure that really would not cater for institutions. Again, institutions are creatures of habit, probably for the right reasons, right? And so they require certain infrastructure.
But it's a beautiful opportunity. It's 100% taker space. Before institutions come in.
Institutions like to cross orders with retail,
Yes.
and there was lots of retail in the space. So there was a natural interest to get in, but it was, how do I do it?
Yes.
Right. And so there was a lack of infrastructure from a PB perspective. There's still, and we're getting better here, on a lack of regulatory clarity, which I'm sure we'll talk about.
Yes.
There are things like accounting. How do you book these trades? How do you account for these? Now, FASB, which is the accounting body, has codified that, right? And so all these building blocks are now there. But going back to when we launched this business about 5 years ago, it was thematically aligned with what we were doing: prime, clearing, margin financing. Mm-hmm. And so, without naming names, let's say some of the largest proprietary, trading firms and hedge funds were looking to come into the space, and they looked at it and saw a couple themes. Number one, fragmentation. Number two, counterparty credit risk everywhere. Number three, settlement risk, or in foreign exchange we refer to as Harristat risk. And number four, capital inefficient, all pre-funded. And so those things, when you roll those up, very clear, PB or clearers tend to solve those things. So who do you go to? The traditional names in TradFi are the banks. The problem with crypto and the banks is, under Basel III, it's 100% RWA haircut, and therefore it crushes any economic incentive for a bank to enter.
Well, in addition to the fact that at the time, the administration was even if it was there as an incentive,
on the back of the neck of
if you
that
touch this, we're going to shut you down.
And your bank accounts were getting shut down. And so the institutions themselves, even though they had aspirations, they themselves were sitting on the sidelines. So a lot of institutional capital sat on the sidelines. Yeah. But as that market grew, the demand became undeniable. So the new administration, I'm sure we'll talk about, has definitely helped in that. But just looking at how the institutions were trying to get in the space, they went to the banks, and there was basically, this isn't going to happen, right? Because prime clearing in traditional markets is a sub 5% return on invested capital for a bank. Yeah. Now imagine, and they're closing those businesses. A good data point there is the number of FCM, GCMs in the CME in 2008 was, don't quote me on exact numbers, I think it's about 150.
Clearinghouses?
Clearers. Yeah. There's 61 left in the world today.
It's just not economically.
And that's just traditional products. So imagine getting this idea, walking into the bank and saying, I got an idea. We're closing prime business in TradFi. We should do it in crypto. Like, that's the last day you're there. So that was a non-starter for these institutions. And so they were very familiar with us because we grew up trading with these kind of household names. And they said to us and said, what would it look like if you extended your platform to cover digital assets? And so Hidden Road being highly regulated, Hidden Road being backed by large U.S. pension fund money.
But just to kind of make sure that we're clear on this. So prior for Hidden Road extending its capabilities into digital assets, you guys were well positioned in TradFi.
Started in foreign exchange. As Citibank on a puked out that business. Hidden Road stepped in there. We have a lot of foreign exchange experience in the firm. And so that business, we do about $30 billion a day today. So it's pretty mature.
Beautiful.
The next business was listed derivatives. This was the roadmap. Yep. You never go in a straight line.
Yep.
And it took us a few years to become the newest clearing member on the CME. It's over a decade. There hasn't been a new one. Mm-hmm. And as mentioned, in that time frame, many have closed up shop. Yes. Swaps businesses, listed derivatives, as mentioned, and that's CME, Eurex, ICE US, ICE Europe, LCH for cleared swaps, like the list goes on. And so what happened was during the build of those products, foreign exchange was live and kicking, listed derivatives was there. The demand for digital asset PB was undeniable. And the names that are pushing you are names you want to partner with.
Yeah.
And so when they looked at it, like, again, from an infrastructure standpoint, this is exactly the area we can operate in, but regulated, backed by US pension fund money, it was a difficult decision for us to do it. But nonetheless, we wrote the platform over about a year or so, had a few anchor clients, and we turned that business on. It was, let's say, very successful.
But it would require another operational model, right? Because you required an offshore entity, you required all these new things.
A ton of new legal entities, infrastructure in terms of how you're consuming trades 24/7 from exchanges that don't use fixed or binary APIs. Yes. We're now talking about WebSocket and REST. These are different performance.
Also, a whole entire talent pool of people that actually understand what digital assets are, right? Because you guys, exactly, whatever team that was there was very versed in TradFi.
For sure.
But this is a whole new world. So now you were like, I need to go get people that actually understand.
I think we were Googling what airdrops were.
Yeah. Okay.
And then on top of that, on the infrastructure side, how do you write legal agreements? Now, most of my legal agreements in traditional markets rely on is the framework.
Of course.
Is the definitions in digital assets are still not clear. We're part of that working group. And so it was, how do you package an agreement that provides, certainty and finality to trade and settlement, right? Like, that's an important ingredient for institutions. So everything from legal agreements to technology to supporting 24/7. That's a very different build, as you're well aware, not only from a risk management, but how do you staff that?
Yes.
And so nonetheless, after about a year's time, we wrote the platform, put it together, onboarded the anchor clients, and kind of that's the story. That was in January of the year FTX blew up. So in that year,
so that's 2022?
2022.
So
think about that year.
Like
we put it on
10 months right before FTX blows up, right?
Things are going great. Then you started with UST Luna.
Yeah, that's June of 22.
Then you had 3 Arrows default.
Voyager, Celsius.
Keep going.
Yeah.
Then the lenders all fell over, the BlockFis of the world. And I guess it kind of ended with FTX.
Yeah.
And one of the important value props as a prime broker is credit intermediation. So your counterparty is no longer the exchange, i.e. FTX. Your counterparty is Hidden Road. And so Hidden Road effectively is taking that risk away.
And you need to cover all of it.
And so when FTX defaulted, which Hidden Road was, I believe, the first in the world to declare it a default, and we executed a portion of our agreement that we no longer support the exchange and what we call exchange risk spread. And our clients were effectively immediately made whole if they subscribed to that product, which, I think at the time.
But it's a very expensive policy, insurance policy that you got there.
Insurance is a close word, but legal and compliance, you cannot use insurance. Yep. It's more akin to a CDS, Ash. But that really set apart, a Hidden Road from the rest of these things. You're now facing a regulated, audited, well-capitalized entity. And so you could size your limits. If you were facing unregulated entity based in the Seychelles with no financials, it was very difficult for those institutions. So that was kind of the start of how we got into the space. It was a very nascent build. The product has matured. We do about 15 billion a day of digital assets between spot and derivatives. That's excluding our CME side, which is very relevant to digital assets. Yep. But that's kind of the origins of the business. And the last thing I would say is it's intertwined with our traditional businesses. What I mean by that is you can trade Bitcoin against dollars, but you can also trade Bitcoin against yen. You can also trade Bitcoin against euros. So having an FX prime broker layered with a digital asset prime broker, you cross those things. So for example, you could trade Bitcoin yen, hedge in Bitcoin dollar, and then buy dollar yen all through Hidden Road. And these are what the large sophisticated institutions are doing. So the business is pretty mature, but the industry itself is still early on. In a baseball analogy, I don't know, we're probably top of the second inning.
Got it. Beautiful. So I guess if I had to pick your brain a little bit, like over the past 5 years since that business sort of really matured and up to the point of obviously getting acquired, that space has shifted completely in terms of what are the problems that we're prioritizing to solve for as a business, right? So maybe 5 years ago, early on, the biggest problem, right? Even before credit sort of being a big bubble, right? Access. Forget about giving me margin, right? Just let's talk about how do I even touch this Deribit thing, or how do I touch this Binance thing? And then today, maybe that problem set has, shuffled itself all
We've
together.
mitigated some of the
Yes.
risks, right? Through tri-party solutions. Again, taking pages out of the TradFi playbook. Some of those issues are still there, Ash, but
I want to know what those were back then.
Sure.
And how those have shifted now 5 years from today, like from that moment in time. And then where do you think that's going to be in like another 3 to 5 years, right? Kind of walk me through your thoughts.
Trying to think of which way I should go, this way or that way.
Yeah.
So let's start looking back, right? The biggest risk in the space was, this counterparty credit risk, right? And it's due to a lack of regulation in the space. It's due to a lack of transparency in financials.
Mm-hmm.
If you take the definition of, best practices according to GAAP and IFRS are regular financial transparency, which means audited financials on a monthly or quarterly basis. Yeah. Crypto, you can't get financials from any of these institutions, let alone audited or on a timely basis. So it's frankly not worth the paper that you're written on. So very difficult for institutions that are looking at CDS markets. Do I trade with Goldman or JP Morgan or Citibank, and you're basing the limit size on the CDS? You have nothing like that in digital assets. So that's where we were. What we've done
You were talking to avatars back then. It's like
exactly.
literally people with JPEGs on their profile pictures on Zooms. You don't even know who you're talking to.
You did not know who these people are. They are the nomads with no physical offices. A large institutions once referred to as we trade on a whole bunch of these websites based, we think, in Asia. Which, when you think about it, it's probably what it was. So those institutions are growing up like the industry. A lot of them are getting regulated. A lot of them are starting to move towards more financial transparency, which is, they understand as the institutional market comes in, these are the things they need. Technology-wise, I think there's still a pretty big gap.
Yep.
We'll come to that.
Mm-hmm.
So counterparty credit risk, number one. Number two, to mitigate that, this notion of vertically integrated stacks, meaning the exchange is the broker, is the custodian, is the matching engine. You're starting to see those things move away. And a good example is tri-party solutions. So instead of posting your assets under title transfer into the bankruptcy estate of these exchanges, you post those at custodians and get credit against those, right? And so I think you're starting to see the separation of duty, if you will. I've been quoted saying this, the separation of church and state, where you have, and this is kind of the end state, you'll have exchanges running matching engines, providing matching services. You'll have custodians.
Which is what they've always been, except in crypto. They woke up and they're like, we're going to be everything. The broker, the settler, the matcher,
And when you're under regulations, depending on jurisdictions, you're not legally allowed.
Yes.
And so I think whether it's market participants that drive that change or regulation forces it, you will end up in a state that we're familiar with. Market makers moving risk around, custodians holding assets, exchanges running matching engines, technology providers, giving the connectivity to all of those destinations. And finally, from the PB side, providing that credit, settlement, and clearing.
Balance sheet, margining, risk management.
None of that is different. Now, the difference is the assets just dollars or US treasuries? No, it's Bitcoin, it's Ethereum, it's XRP, it's stablecoins, it's tokenized money market funds. I think that's going to be the next step, is really when you start to tokenize anything of value and use that for good collateral as margin and for settlement. So we're still early on in the space. But those were the issues early on. Some of them are there. A lot of them have been solved and continue to be solved. But fast forward, again, I think it's that separation of duties, and it'll look more like a traditional market, but you already see that. So what I mean by that is one of the biggest trades is a basis trade. Buy crypto spot, sell CME futures.
Yeah.
Or for institutions who couldn't put spot on their balance sheet, buy the ETF, sell the CME future, right? And so getting that cross margining and margin financing between that still doesn't exist by the banks. It's an area that Hidden Road is focused, razor focused on. And that's not just linear product. That's options as well. And so like if you look at the CME's recent First Friday futures, it's like the most successful launch ever.
Yeah.
The IBIT ETF is the most successful launch ever. So it's undeniable. But we do need to continue to lay down the foundations to this asset class. And I think they will look and feel similar to traditional markets, but these are digital assets and they will be a modern approach to those things. And so we should embrace the technology behind it because that's what's rewiring Wall Street in the way commerce is transacted.
Do you feel like cross-margining is a much more pressing issue in digital assets only for the mere fact that like liquidity fragmentation exists the way it exists in this space? Like if you thought about it, like let's say there's like, it's only 2 venues in the world that are touching crypto and they have like 100% of the market share. Would cross-margining in that scenario still be a major hurdle for a lot of institutions?
In scale. And when you're talking about institutions, somebody's running 300 million by 300 million, right? Like that's a decent amount of balance sheet. So if you think about, I don't know, let's say you traded spot on a fully funded exchange like a Coinbase of the world, right? It's $300 million of cash. And if you sold a CME front month future against it, and we're talking about Bitcoin here, let's assume that's circa 25% margin of 300 notional. Like these are chunky amounts of cash that you need to put on.
A lot of collateral.
And you're delta neutral, like you're flat. So that's a really a great area where PB and clearing firms want to finance those trades and the trading firms want to get that balance sheet so they can scale those. But to your point, I think in traditional markets, you're starting to see all of the major trading firms, they're multi-asset, right? No one's really just saying, I'm in the FX space or I'm just in equities, right? The markets are all interlinked now. And so there's cross-margining between all of these things. I'll give you an example. And this is the area Hidden Road is focused in more broadly besides digital assets. But take fixed income, right? A big trade is you buy 10-year on-the-run treasuries, you sell CME front month. Take foreign exchange. You buy spot from JP Morgan, you sell CME front month. Or NDFs. You buy Brazilian real, you sell the future on B3. Or INR, you buy INR NDF, you sell it on SGX. You trade complex energy. You're trading CME against ICE, cross-margin and margin financing. Bitcoin and Ethereum and XRP and Solana, these are really no difference between major exchanges and regulated exchanges. But within the complex of crypto, there are hundreds or thousands of coins and many thousands of perpetual swaps against them. Trading that basis between those are quite attractive from a revenue opportunity. So I'd say that you have a long runway where cross-margining is going to still be very advantageous.
I mean, that does make sense when you kind of lay it out that way. And also you mentioned this world that we're heading towards, like everyone being a multi-asset, like natively supporting multi-assets in general, right? Like I think that is not just a PB approach in a sense. I think that's like when you look across the board for everyone in that stack, whether they're like the exchanges, the brokers, the fintechs, every single person I think has now started to realize that like there is no such world in like 5 years from today where like you're only doing X and people want to come to you, right? Because if everyone else is doing 360, then you're kind of like left behind. So with that being said, right, what does the PB of tomorrow kind of look like in terms of, let's say you and I agree that like in the future is now and it's very digitally native, not just crypto, which is digital in its own sense, but also everything else, right? And I don't want to use the term tokenization because it's kind of like overused at this point, but like everything is
it's what you're describing.
But everything is effectively no longer sort of going through like 10 different middlemen, so it can actually settle or exist in someone's ownership land. Right?
I think the one thing I would just add to that, and then I'll try to reply here, is it's not only from a PB perspective, all of those different asset classes, let's sum it up as asset classes and products that you need to understand and risk manage. But you need to do that on a 24/7 basis.
Yes.
And so that changes the game. And so kind of taking a step back and just kind of double clicking on what you said, like I completely agree. It's not just the trading firms that are multi-assets, it's the exchanges, right? You're starting to see the native crypto exchanges roll out traditional products. You're seeing the traditional exchanges adding on digital products. The Robinhoods of the world are now, obviously, very large in the digital asset space.
Yes.
But you're seeing that new ground, which is taking the digital asset technology and tokenizing those real world assets, right? And so that's the piece that will make everybody need to be in the space truly multi-asset and probably modern where things are more tokenized and certain assets, not everything. But to answer your question from a PB perspective, I touched upon it earlier. I think the key is that anything of value is going to get tokenized over time, and it should. There's lots of benefits to that. This is not the right context to do it, but we can go through those at some point. And so with that said, the example I use is Mike Higgins buying a cappuccino at Starbucks on a Sunday, and I'm paying with NVIDIA shares. Now, that sounds crazy. Why am I using Sunday, NVIDIA shares, and coffee, right? Because it's a Sunday, so markets are closed. Yeah. I'm taking shares that are tokenized, and I'm using those for settlement for some hard world asset, i.e. my latte.
Well, instant, because you're buying the coffee now.
And
right?
instant.
So that share somehow needs to unlock its value immediately right
and
now.
Starbucks needs to know how to haircut that, yes. right? And I need to know how many fractions of shares I should sell for, that cappuccino, right? Yes. And so what we're referring to there is, this whole new world of risk management around how do you haircut assets? What is the liquidity profile? I'll give you an example. When you calibrate in traditional markets, margin calls or cure periods, right? Let's take foreign exchange. You say to somebody, okay, you're on margin call today. And then I call you, you have 24 hours to pay. So you have effectively what's called the slippage period, right? Or what the mathematical side is the MPOR, the margin period of risk. You're saying, hey, Ash, you got to top up your account. Hey, you're not listening to me. I need to default you. How long does it take me to get out of that position? That's the period of risk that you're monitoring.
There's decay, right? Within that 24-hour period. And that can go very, very
bad. And so
bad.
the amount of margin I request is calibrated on when you're in margin call. When you don't pay, I can get out of the position without the margin that I'm holding going negative if you do your job right. But now there's a world where, go on the foreign exchange example, the reason you have these business days are because the banks are only open during a certain time. Yeah. So you're literally calibrating when the Fed window's open to get dollars.
Yeah.
Well, now if I understand that Ash is going to be able to collateralize his account or cure a margin call by sending me a stablecoin, RLUSD stablecoin, the Ripple one that's has made its debut and doing well, or any of these tokens that contain value that the PB can accept, understand, haircut, and risk manage, then I can shrink your margin period of risk. And therefore, I can ask for you to post a smaller amount of margin up front, which makes this whole business more capital efficient for you. Instead of giving me $10, you can now give me $7 because I know you can meet a collateral call in this period of time. And by the way, we're moving from business days to calendar days. Fun story on that. Negotiating the digital prime agreement with probably, the top 5 proprietary trading firm in the world who was just coming into crypto. And when counsel saw the agreement, they said, well, we can't sign this because how could we possibly meet a collateral call on a weekend? The treasurer is golfing.
Stables.
And I was thinking, you guys are not ready for crypto yet. This is 24/7. Yeah. And so that world is happening. And so from Hidden Road's perspective, Ripple's perspective, we are already supporting obviously a range of fiat assets, stable coins, Bitcoin, the hundreds of coins that we take. And then beyond that, the money market funds, the Butels, the Benzis of the world, we're quite excited about those because clients can post assets. Those assets can sweat, right? They can earn, positive carry on it. And when you're talking large quantums, earning that interest when, SOFR is 4.25% is largely a requirement these days. So.
There's so much I want to talk about, honestly. I don't think we have enough time. Oh my God. So genuinely, this is actually very interesting. I definitely want to give some time to talk about the acquisition and everything that went through that, right? But before I do that, because I cannot hold my curiosity just to get your thoughts on things, and I'm going to have to pick one of those two things because I'm thinking about all right, maybe actually, you know what? Let's do this. Go. So your quick 2-minute take on prediction markets and where PBs anywhere fit in there.
Super interesting you say that because I just came from an internal call. I'm in New York with you, so excited to be here.
Beautiful.
But we also have an executive committee offsite. And the last one, we were assigned a mini project, which was to look at those prediction markets, event contracts, and where is there a space for us to be in there? So I'd say over the last 6 months, done fairly deep analysis, and that opportunity is and in the public media, there's been an enormous amount of information about that space and the growing appetite for that space. So can't say we're uncovering something other folks haven't looked at, but we are positioned fairly well to get involved in that space. We'll make some decisions soon, so I can't commit to it. I think that those markets, moving to DCO, DCMs, getting the proper regulation in there is key. I think it looks and feels very similar to crypto, where these exchanges, you can open accounts and fund those. You get no cross margining between them. It's literally the same value props that a PB can bring, but you need to be an FCM. Yeah. So Hidden Road is a CFTC regulated futures commission merchant. So we're positioned well to potentially support those platforms from our FCM, offer a bunch of them cross margin because it's all pre-funded, so it's capital inefficient again. There's a settlement layer to it.
But you are seeing genuine institutional interest in these markets now.
There is, I think it's again very similar to crypto. Started by retail, institutions want to cross orders with retail.
Come in and take a cut of this.
You're starting to see that. And you've seen that it's funny, I spent a lot of time in the foreign exchange markets as mentioned, and foreign exchange was started by institutions, and then when PB came, retail was able to get in, and so you have this great mix. Whereas the crypto market and these prediction markets, it's really retail first and institutions are coming in. So problem set similar, but just going in the other order. Yeah. So I would say the one other thing that we're talking to those folks about is their ability to collateralize with stablecoins, because a lot of these events happen on weekends.
Yes.
And so folks have to pre-fund these things early. And so there's a number of different angles that Hidden Road is and Ripple are looking at and see if we can add value to our existing clients, to a new subset of clients in certainly this growing and exciting area. So I think it's early stages going in the right direction. I can't commit that Hidden Road and Ripple will be there, but we are certainly looking at it, and it looks very interesting.
I love that. I think there's going to be, I'm looking forward to some announcements, I'm guessing. So
there's some very large market makers in that space already.
On chain or on the other one that is not on chain yet?
I think across both.
Okay.
But it's
which one do you think survives or thrives? Let's just put
I don't know, but that's a good prediction to bet on.
Exactly,
so
on both markets.
Both of those would probably get a lot of interest. But I think a number of them have a lot of legs.
Well, one of them has the backing of So
there's a lot of money coming into that space. It's early on, but watch that space for sure.
Beautiful. Okay, so now let's get into the meats of what happened throughout the acquisition. Why did you guys go through with this? Why do you think this is a great decision now? And where does the future, what does the future look like for Hidden Road?
Very bright. Yeah. And that's my honest view of how this looks. And so
I want both views, by the way. I want your operator view, as in like throughout literally the nitty-gritty of the acquisition. Like,
I'll give you the details.
Yeah, the details, right? Like what could have went wrong? How did we actually, structure a deal that made sense?
It's like when you get married, right? Everybody says, wow, that was perfect. But no one knows all of the stuff that didn't go quite to plan. There's always some story.
And then your thoughts as an executive who's looking forward towards the future, right?
Sure.
So give me the PR take later, but give me the...
Let me give you kind of the backdrop of this and kind of how things, came to be.
Yes.
So Hidden Road, we're long in our journey or down the road in building out prime clearing, margin financing businesses. And the way we were structured from a balance sheet perspective, we did three things, just to give context here. Number one, if you looked at the current incumbents in that space in prime and clearing, very weak technology, meaning banks are organized in a very vertical sense. So you would have a clearing platform for equities, a separate clearing platform for fixed income, a separate clearing platform for
CFDs,
listed derivatives, whatever it would be, right? And they're not speaking to each other. So when you think of the Archegos blow up at the likes of the Credit Suisse, like they didn't know what their risk from one client was across multiple parts of the bank for days.
It's like siloed pods completely.
Irresponsible.
Yeah.
And so we said, okay, well, let's bring modern technologies and techniques kind of from high frequency trading and bolt that into a clearing business. So instead of being vertical, we're a single horizontal clearing infrastructure. So that's the first thing we did. The second thing we did, and I promise I'll answer your question on the Ripple. The second thing we did was to get it regulated by the market regulators and stay away as a bank, right? And so we're regulated by the SEC, FINRA, CFTC, NFA, FCA, kind of
every
on a global,
four-letter
and have to comply and hold capital requirements, each one of those. And so we're pretty good at running, regulated infrastructure. It's really important for us and our clients, right? It's a trust business.
And it is a competitive edge for you as a business, 100%. Right? That's the whole point.
And watch that space, more of it. We like the digital space, right? Let's regulate it. Let's understand it and adhere to those things. Because that's how
you guys are also not just regulated in the US, right? Like you're regulated.
Well, I'll tell you about the Ripple stuff. So it's a good dovetail to it.
Yeah.
So getting to the third pillar of building our business was, well, how do you fund it? Well, banks have predominantly been funding their businesses, predicated on rehypothecating client collateral, i.e., I'm a depositor at Bank A, I send them my $100, they pay me SOFR minus a lot, and on the other end, they lend that out to PB and clearing firms. But that's how you get to run on a bank, right? And that's where these punitive capital charges. So we said, we don't want to be in that path. I don't want to be operating as a bank. And so we said, well, what if we funded with buy-side capital, right? And so you looked at public markets versus private markets. Private markets are dominating. And so we went out to the private credit and pension funds and said, would you invest in this prime clearing margin financing business, effectively creating a new asset class, like counterparty credit risk as an investable asset class for institutions? And so that's how we started. We got $250 million in, launched the businesses, deployed all that capital, and realized, there's a supply-demand problem. There's way more demand for balance sheet than the supply. So we went back to raise capital. This is last year. And those conversations were going well. Now, Ripple happened to be a small investor in Hidden Road. And so we weren't looking at them for the larger deal here. But what happened was, in November, there was a change in administration in the U.S. Mm-hmm. And so, as you know, and I think it's been said before that, knee on the back of the neck of the industry, that this administration was, pro digital assets and gonna, lightly regulate this, kind of like the early days of the internet, and give it a chance to really look at, the potential here. That led to a pretty organic conversation with the folks at Ripple of saying, well, what if we did this deal? What if we put our balance sheet? And when you look at Ripple's balance sheet, it is tremendous. It is one of the largest balance sheets in capital markets, let alone digital assets. And so from Hidden Road's perspective, the selfish side of it is, well, we've launched these businesses and need a balance sheet. Ripple solves that. We're very much in the digital asset space. They're a digital asset market infrastructure, modernizing financial technology. Like the synergies are there. And so that was, discussions end of last year into the start of this year, formally announced it, roughly in the spring of this year.
So who made the first move? Was it their idea or your idea?
I think it was a combination of both. I mean, folks are actively talking all the time, and so
you both said "I love you" at the same time.
Yeah, something like that. Yeah, it kind of worked out that way. But in all seriousness, they're a user on the platform, so they had firsthand experience of leveraging a PB for their digital asset trading activity, which is largely around their treasury, et cetera. And so they kind of understood our business, and we speak the same language, and so pretty organic, I'd say. And so the synergies going forward are clearly, number one, from Hidden Road side is balance sheet. Number two is the market is moving towards, traditional markets are moving towards, leveraging blockchains and modern technologies and moving 24/7. And so as an L1 for Ripple, like this is a great opportunity to start taking real world capital markets and putting those, on chain. Number two is they launched their RLUSD stablecoin, which is NYDFS regulated. It's top grade stuff, right? And that's really important for us. And so for our counterparties to be able to use that as collateral to post the Hidden Road, again, shrinking that margin period of risk, making it more capital efficient. Again, not just a crypto story, but traditional. Like these are the early things that we're building. And then, as the world shifts towards tokenization, and then there's a number of acquisitions, that Ripple has made, which I won't comment on here, but bringing all those things together, they own a custody business. And so, under the hood between, Hidden Road and Ripple, you can have a very, very complete offering, like a full solution, a full stack crypto capital market solution, including all the way down to the payments. Or you can take those things modular. And we're not trying to force, you have to take this. It's come and choose a menu as such.
No, but I think it's a
Lots of
match
stuff.
made in heaven, right? Like a PB in this space with its own effectively stablecoin, right? You're in
A
full
regulated
control of-
stablecoin,
yes.
like that's key.
And that you're
Regulation
now you're
first.
owning the settlement layer effectively. You're this is the dream of a PB, right? Because
I'll tell you, man,
it's risk model, right?
Yeah, you can do it. I should just ask you the questions. You got a good answer on it. But it's really interesting, Ash, because when the acquisition was announced, obviously in these things, there's a period where everybody needs to be very quiet. But post that, the amount of messages and emails that we received were one, encouraging. But I would say it was the second wave of those where people came back a week or two later and said, we're thinking about the acquisition you guys did. And we totally get it. Like, we understand exactly why you did this, even beyond some of the things we had thought. But I would say it's a really, really strong match, a very large balance sheet, regulation first, modern, infrastructure firm backing a capital markets PB. These things go well. And so early days, but we're excited. And so where we are is just waiting for the final regulator to approve change of control. And then there'll be a rollout of these things. I'm sure rebranding of sorts, but it's been an exciting journey.
Beautiful. Where is where are you guys headed now? What's the future looking like? What are you focused on these days? Tell me, what are your next big goals for the next 6 months?
So let's talk about options. We haven't talked about options.
Let's do it.
So I think it's a good segue into it. And,
Yes.
and I think so. Staying on the digital asset side of things, I'd say bullet pointing a few things are one, just continuing to expand the product range that our clients are demanding.
But
so
it's
that
also
means,
funny that I'm sorry to
you're
interject here, but it's funny that you mentioned let's jump into options right after we talked about your acquisition, because you are one of two major acquisitions of this year. The other one happens to just be the biggest options venue in the world. And
Makes sense.
People can start wondering, this could not be a better timing, I guess, where things are heading now.
On that acquisition, I think it's an absolute great acquisition.
Yeah.
I'm sure you have a lot of views, and I'd love to hear your views on it. But from our standpoint, I think Deribit built a fantastic business.
Absolutely.
Coinbase is a great company. And getting derivatives, proper derivatives underneath their hood, I think is a really, really interesting opportunity. And we certainly partner with both of those folks now that they're one.
Yes.
I'd say we plan to do a lot more there. But in terms of where we're heading, again, product side, I would say it's, just completing the digital asset offering. And so whether you want to get Bitcoin, in different, it's like coffee. How do you want your coffee? How do you want your Bitcoin? Do you want it in CME futures or options? Do you want it on native crypto exchanges? Do you want it as an ETF? And so really building out a couple of those points to be able to offer access to institutions to all of those and cross margin and margin financing. I think similar to market infrastructure to foreign exchange, what tends to happen over time is these markets tend to move bilateral. And so if you think about it, if you're trading on a club, right, and you're a market maker and you want to trade with, the retail broker of the world, you're putting a price in, but everybody on that club can interact with your price. So what you have to do is price for the worst client, with the most toxic taker. And so what you've seen in foreign exchange, a lot of that move bilateral, but they're not taking each other's counterparty credit risk and the Harris-Stat settlement risk. They trade bilaterally and post-trade give up to a PB who handles all of those back office functions. And so we've been focused on building out an OTC business in linear products. I have a panel of all the major market makers.
Okay.
I would also say watch that space because the TradFi market makers are now very active in crypto.
And you print. So you guys settle.
They trade with the retail brokers
Okay.
bilaterally, but post-trade give up the positions to Hidden Road where we net and settle between.
You net and settle between. Okay.
Exactly.
Beautiful.
So it's a page out of the foreign exchange playbook, if you will. And we think that has legs. Bigger demand we've had is for real institutions to come in or trading options. And
So the last missing piece.
That's one of the last missing pieces.
Okay, let's do it that way.
And it's the most complicated. It's the most.
Yes.
It's very hard to complex.
Right.
I mean, you're an expert in it, so it's when you need to dull those things down, it's hard, right? And these are non-linear products, and risk management is different, and so folks are a little bit maybe more nervous to get in that space. But that's what institutions. These are expert, these are professional investors, and they know what they're doing, and they want to apply the same tactics and strategies from traditional markets here. And so, derivative of the world in options is by far the largest.
80% or so.
I was going to say 75 to 80%, right? And that's great. But folks,
and there was a concern that it's going to go down, but I think now,
it could go up. I mean,
now with the Coinbase acquisition,
given the balance sheet behind it, I think watch that space. But the point being is still that there's still a need for. And options is more of a high touch business, right? There's still a need for some folks to negotiate pricing bilaterally and want to trade, i.e. paradigm folks were happening there. And then they were using Deribit as kind of the pseudo, clearing house, if you will. And so we've had a lot of demand for OTC options. And so we now have onboarded and went into production a few of the very large market makers that are pricing a few consumers. And here, and I just want to make sure I get this out. Yes. Here being in the US, Ripple has all of the state MTLs, just about all, don't quote me on that, and the New York bit licenses in California. And so being able to offer in the US from Hidden Road Ripple spot perpetual swaps, because we took our UK broker dealer and dual registered as a CFTC swap dealer, CME futures and options, all cross margin and margin financing. That's where we're going in the digital asset side. But staying on the options side of it, OTC and exchanges, which would be the derivatives of the world, OTC, CME, cross margined. We think we know there are large banks in the space writing derivatives to clients, hedging on CME, but the market makers they're hedging with they do a block with the mark, they do a trade with the market maker, then block to the CME.
But
that market maker is hedging on Deribit. He has no cross margining. That's the case.
So I would add my 2 cents there, because actually a lot of our client base fall exactly into that category, right? So Kemet is kind of by far the leading sort of provider, especially on the option side specifically. And I think a big sort of theme on why block trading on Deribit, or sort of the whole bilateral approach, let me ping you on Telegram, give me a price, let's go back, right? And then maybe at some point Paradigm.
Remember, it used to be Bloomberg and Reuters, and then Telegram and
then
WhatsApp.
Well, it's actually funny that Telegram became the definitive.
You should have a podcast on that. Yes, who's going to win that space?
But effectively, I think a lot of the reasons why the bilateral space, specifically for options, was continues to be dominant.
Yeah.
Although I would say it's actually getting less and less dominant over time now, was the mere fact that they're, even with Deribit being the largest options venue in the world, liquidity just doesn't make a lot of sense for very large sizing, right? It's just, it didn't. But I think now things are shifting a little bit. There's definitely a lot more liquidity on Deribit than it used to be.
Sure.
And more importantly, a lot more quality liquidity than it used to be. And that's the more important part, right? Because I think it's not just about sizing. It's about how much of that is actually toxic versus real flow. And I think that is shifting a lot more, especially now with the new acquisition, all that's going on. We're seeing specifically for also new clients who, by the way, prior, let's say a year and a half ago, when we were talking to them about why don't you explore algorithmically executing that same size directly on screen? And their biggest hurdle was there just isn't enough.
There's not.
Right. And even if there was, to put that algo together, it's a waste of time. But
that's the area I want to partner with you guys, right? Because when I think about, you and I grew up when hedge funds that were big were, 25, 30 billion. The hedge funds now, when I'm in New York, they're 100 billion.
It's insane. Yeah.
And, for them to come into certain markets and trade certain products, they need size. Otherwise, it doesn't make sense. They don't get out of bed.
Yes.
And the US, with the change in administration and the regulatory shift, right? We've seen this SEC and the CFTC collaborating, the Project crypto, the Genius Act passed into law. Like these things are happening and these large institutions are mobilizing. And one of the areas is definitely options. And so, the partnership between, a prime like a Hidden Road, Ripple, Kemet from a connectivity and the whole pricing of the option side to the Deribits and Coinbases of the world, this is an area where I think, collaboration versus competition is probably needed because the opportunity is pretty massive.
Absolutely. And I think you touched on a great point of like sort of the world where you guys are heading of like, it's like multi-asset with optionality in terms of liquidity flow. So the idea is like, you're not trying to make one win versus the other. The idea is like you're trying to empower all these participants to, all right, you get to pick. Do you want to RFQ this? Or do you want to go on screen algorithmically? And in a very mature world, both are very viable options. It just comes down to your strategy, what you're willing to take, the risk you're willing to go for, and where things might be, right?
Exactly right.
Having a stack of providers, right? Like a PB that clearly understands the risk, gives very strong credit balance sheets, margining with a technology layer that allows those participants to go either way is what makes this market mature.
And I think anonymity, right? Folks forget that as well, right? PBs provide a level of anonymity, right? You don't always want to show some of the market makers in the space. Origins are proprietary trading firms, right? And their strategies are designed solely to optimize their revenue. Very different than banks who have been, market making as a service to some extent.
Yes.
And so there's still this important of level of anonymity, and primes, do that. And so again, it goes back to the building blocks of infrastructure for trading in capital markets, which digital assets fits neatly into.
I want to end this with one final sort of question and get your thoughts on it. But do you believe in a world where both crypto native venues and TradFi venues live next to each other? Or do you think a consolidation is going to happen where the Binances of the world are just no longer really a thing, and or the Nasdaqs become the Binance? You know what I mean? Where do we go from here? Do they die? Do they get consolidated? Does the Nasdaq become a Binance? Does the Binance become a Nasdaq? Or do they both they merge and
I'll say this. I think and this is not to pick on the Nasdaqs of the world, but we are moving into a world of 24/7.
Yes.
So I would say that if you're not 24/7 from a matching engine standpoint to a back office and booking standpoint, if you don't evolve, you
stand to lose. Yes, absolutely. Because we're seeing some of those crypto native exchanges already offering equities.
That part is, to me, is undeniable, and the world is inexorbitantly moving in that direction. And I think the large names, from TradFi know that and are building to do it. And not having a clean slate is difficult, right? To rewrite your technology guide, to rewrite, it's very, very challenging.
It's going to be. That's why.
So I think it ends up with bits and pieces of both, right? And that's ultimately the TradFi space has a lot of things right, but it needs innovation. It needs this 24/7. That will reduce risk and help liquidity and a number of benefits that the digital asset space could come in. But the belts and braces of traditional markets and the oversight and the regulatory side, and I think those things. So I would say. The Binances, the name you use, are very, very large institutions, got dragged through the coals and paid big fines, are cleaning up, a lot of their setups. The SEC, had a forward statement, right, which is, really going to define, rules and safe harbors and moving digital assets onto regulated venues. So that's happening, but the Binances of the world probably become a regulated venue. Mm-hmm. The Nasdaqs of the world, the matching engine technology, that is actually, co-located in the Equinix NY4 or LD4 or TY3 campuses, deterministic latency, fixed and binary APIs. The digital space just isn't there because it's been largely retail. And so again, I think it's probably somewhere in the middle. I think this asset class is early stages, evolving. I think there's plenty of room for all of them.
My gut feeling is that as both someone in charge of strategy for a business, but also more importantly, a technologist, someone who actually wrote code for a long time in my career, it is a very hard problem to solve technologically to kind of have like if let's say tomorrow the CEO of like ICE, of NASDAQ, whatever, is like wakes up this morning like and like brings in every single executive, and they start saying, all right, we want to go 24/7 365, and we're going to offer every digital asset in the world. From that statement to this being a real thing, the problem
I'll have no hair left.
Yeah, I'm not sure I see a path, right, that it would be viable and economically worth it, that by the time it's actually a real thing, you're still able to compete somehow, right? I think this is why my gut feeling tells me that we're going to be seeing some very, very major acquisition deals.
I was going to say that's
like 30, 40, $50 billion deals happening in the next like 3 years, where someone wakes up and they're like, we have to figure out a way to buy Binance. We have to figure out a way to then buy, or Binance has enough money to go back and like try to buy.
Well, that's actually what's happening. I was going to say that there's a large investment bank that's been doing a bunch of these deals. And I think it was Kraken acquiring NinjaTrader.
Yes.
And a publicly traded company's CEO called that investment bank and said, should I be nervous? And they were like, well, what do you mean? Well, because NinjaTrader was largely a TradFi asset that crypto firms are buying. So I could see it going that way as well. But I would say,
and they have a lot of capital. That's the interesting part, because it's not public and people can just assume, right? But the reality is, I can see a world where Binance has more money than like a lot.
You pay $4 billion fines and you don't even, like, the platform doesn't have a hiccup and no one's even concerned. I think it actually, to some extent, provides credibility, right? That you actually have that capital. So I think we're largely aligned. I would say that, yes, acquisitions are definitely happening in that space. I would say even just down to a smaller level of, how do institutions come into this space? Do they build or buy? If I'm an options firm, I don't build. I take your solution because it gets me to market. And that's my focus is, what depends on who I am. It's either the alpha or it's the distribution side, but going to spend all the time and resources that,
you're not a technology firm.
It's a different business, mate. And so I'd say, fast forwarding, you'll see a combination of, best practices from traditional markets applied to digital assets, technology from digital assets applied into traditional markets. But those worlds, people are saying, the bridges here, it's already merged. It's already happened. And so we're just going to see, more and more evolution over time.
This was incredible. I wish we had more time, but any final thoughts that you want to share?
No, excited, to close this deal with Ripple. Excited for what the future of that brings, and hopefully we can continue adding value. Thank you for organizing. It's awesome to be on the show.
Thank you for showing up today. This was incredible, Mike.
Great.
Thank you.
Thank you.